Hello, everybody, and thank you for joining the conference call today on the outlook for security tokens 2020 and beyond. I'm Lou Kerner with Crypto Mondays, and I am very happy to have four security token experts on the call with us, including Dave Hendricks, CEO at Vertalo, Tom Lombardi, Director at Wave Financial, Mason Borda, Founder and CEO at TokenSoft, and Antonio DiCristo, Chief Business Development Officer at COG Networks. I am actually doing this call from Denver, Colorado, where I'm attending ETH Denver and the events that are preceding ETH Denver. And while the majority of this is about what's going on in the Ethereum and the decentralized world, there's still a lot of talk about security tokens and the stuff that Tezos is doing. So security tokens are a thing. The question is, when is it going to be a big thing? And we've got four experts to help us talk about it. And with that, each of our experts are going to talk for about 10 minutes. We'll open it up for questions from the audience when we're done. And you can actually put the questions in the chat app on Zoom, and we can actually even answer some of them during the call. But the idea is, we should have a good time, have questions at the time for questions at the end. And with that, Dave, you want to take the computer?
Yeah. Hey, Lou. Thanks for having me on here, and it's great to be on here with my friends Mason, Antonio, and Tom. So great to be chatting with you guys here today on a rainy day here in New York City. So there's been a lot of questions about, what is the actual? I'm going to show some slides for you in a second.
So, okay, you got it. Yeah, you got to take the screen first.
Yep.
Hit the share button.
Yep.
There you go. Rock and roll.
Look at me. So there are a lot of issues, with security tokens today, mostly in the minds of people who are outside the industry. They wonder, where is the business? Where are STOs and where are digital assets today? What are the regulatory hurdles? What's keeping this market from blowing the roof off? And I think actually that there's been a lot more movement than is readily apparent to the eye. But first of all, let's talk about some of the problems that we've all encountered. Everyone on this call and everyone who's listening have encountered up to today. There's a problem. There's a gap between the regulatory environment and the technology. After the ICO kind of era, 2017 to 2018, regulators got very skittish about this new technology and the crowdfunding methods that were applied, the violations they saw of Reg D, Reg S, and S1 registration. And so that kind of created a lot of friction in the system, and it had the effect of scaring away a lot of potential investors and also companies that might want to enter the space as either issuers or technology companies. A lot of this has to do with the way the data is handled. Vertalo, as a registered SEC transfer agent, like TokenSoft also is, saw this model, saw these issues several years ago, and what we recognized was one of the biggest impediments to the adoption and success of so-called security tokens or digital assets was the actual management and treatment of the stakeholder and shareholder data, and specifically the concept of restrictions of transfer and ownership rights. So up until now, and up until companies like Vertalo and TokenSoft started addressing these issues, there was a lack of trust by both regulators as well as issuers and investors in the overall space. The next thing, which has kind of held back our industry and ecosystem, has been very, very wonky interfaces. the requirement to use tools like MetaMask or any kind of wallet, the notion of having to manage a token instead of certificate, these have all been issues which have held back the adoption by normal Main Street issuers. And it's frustrated multiple parties. And those parties are not limited just to issuers and investors, but also to regulators. Vertalo has been working with the regulators since 2018. We've spent a lot of time talking to them, and their biggest concerns have been in the area of broker-dealers and custody regulations. After 80 years of SEC 33, 34, and the 40 Act, a lot of structures and systems have been developed to manage the transfer of ownership between parties, to manage the settlement of transactions, to manage the custodying of assets. Up until very recently, a lot of this wasn't answered. And the SEC was even asking questions about this and putting out reports. They put out a joint statement in July, the joint statement on broker-dealer custody between the SEC and FINRA. And what we've seen is a lack of understanding between two parties, the technology providers in the space and the regulators, as to how this data is supposed to be handled, how these assets are supposed to be traded, who can trade them, what the custody regulations are, how they're settled, and then what happens when something goes wrong. So companies like ours, of Vertalo and TokenSoft and other companies, are working very, very hard on technological solutions which map to current regulatory realities. And we think that in 2020, we're going to make significant progress as we find a convergence between the regulatory requirements that are being enforced by a fairly conservative SEC and FINRA, and the capabilities of technology that are built by people like Vertalo and TokenSoft, and they're being utilized by firms like Wave and the COG Network. What do I think is going to happen this year? I think what we're going to see is some fairly substantial increase in the number of issuances and a number of investors who come and purchase and take part in this ecosystem. Why is that? One reason: improved offerings. There was a very, very big mistake which was made early in the security token ecosystem revolution. People came from the ICO world and they thought, oh, STOs, it's a great way to raise money. Just like ICOs were a great way of crowd fundraising. What we're finding out now is that, in fact, STOs are not a great way for fundraising, but they're a fantastic way to market and manage a seasoned asset, and to improve liquidity for illiquid assets, to improve access to markets, and to reduce the costs for issuers in terms of managing their stakeholder relations.
Hey, Dave, why do you say it's not a good way for raising money?
Mostly because of the mechanisms. If you want to go buy a stock on E-Trade, or if you want to go to Coinbase and buy some crypto, you don't need to know how to use a wallet, and you don't need to know anything about tokens. You don't have to worry about self-custodying, setting up a MetaMask wallet. So just the front-end experience of investing in an STO is daunting for most people.
Do you think it's ever going to get solved, or you think?
Yeah, absolutely. Vertalo solved this by actually abstracting both the wallets and the tokens. So any issuer and investor who's on the Vertalo system doesn't need to actually know how to use a wallet. In the summer of 2019, we rolled out direct custody keyless wallets. These wallets
so you just said
expertise.
So I'm confused. So you said the reason it's not is because of these problems, but it sounds like you said that you've solved the problems.
Yeah, well, we think that the biggest problem to adoption is eliminating the technical hurdle. Think about this: like you're my.
But no, we get the technical hurdles, but I thought you said that you solved them.
Yeah, I think we solved the technical hurdle. The next hurdle is quality of offerings. Okay, so once the technical hurdles are fine, then the question is this something that you want to invest in? And a lot of the early issuances that came out as STOs were projects that were otherwise uninvestable. They couldn't raise VC. They didn't have
Right,
any
but that doesn't matter. Let's look forward. We know what happened going backwards. What I think the idea of the call was what's happening going forward. What does the industry need to do? Where we're at, where we're going to be in 2020, where we're going to be beyond. And in terms of, if you say the technical issues have been solved, that's awesome. If there's still technical issues and they won't be solved for a year or two, it'd be great to know that as well. But if they've been solved, then is there a reason that you would think that there won't be quality offerings here? And do you think that we're get offerings with this new technologies that weren't even possible before?
Yeah. So now what we're seeing now are sectors like REITs, okay, and then venture funded companies. And I'll tell you one area which is really emerging, and that is venture funded startups. There are 9,000 startups, venture funded startups in the US that are valued between 100 million and $1 billion. Most of them will never have a chance at going public because they're not going to reach $1 billion, and an investment bank isn't going to take them on. Most of them will not be acquired because the number of acquirers that are big enough to eat up $100 or $500 million company is very limited. The next and third way for liquidity for these venture funded companies is digitized direct listings. And I believe that technology like ours, the technology like we see in digital asset tokenization, offers a clear path for seasoned venture funded companies and things like private REITs to find a new market that is enabled by technology. Easier to use technology, offering shares in seasoned assets with real product and real traction, real results. And that's what's going to happen in 2020.
Terrific. Thanks a lot, Dave. So thanks for sticking around for the Q&A at the end. And with that, I'd like to turn it over to Mason. Mason, you want to grab the screen?
Absolutely, yes. Okay. Cool.
Awesome.
All right. So my name is Mason. I'm with TokenSoft. We help issuers that are seeking to put their assets on the blockchain do so. We help them not only domestically, but internationally as well. So we help them comply with securities regulations internationally. And we found ourselves building a lot of the infrastructure to help make this world possible. So those are some of the things that I'll talk about today. Just really quick overview about the company, founded by myself and James. We bring a bit of blockchain architecture experience as well as traditional cybersecurity experience. I just brought on a Chief Legal Officer, Alex Levine, who is former SEC, CFTC, OCC. One of the reasons for that is, as we've been building up infrastructure in the space, there's just a lot of heavy lifting on the regulatory side that we have to do just to get, we're at a phase where we're having to get regulators comfortable with what's going on. We're starting to see more registered offerings emerge and get near the door. And so I'll talk a little bit about what's coming up, but quick overview of our corporate structure. So we have TokenSoft, the technology company, building this regulatory glue between today's regulations as well as the blockchain in the world of securities. We also have a broker-dealer called TokenSoft Global Markets and DTAC, a registered transfer agent, which helps us to service our clients. And so basically we have clients that are doing unregistered offerings, exempt offerings under Reg D as private placements. And then we have clients that are seeking to do registered offerings as well. And if you look at the sort of the different phasing that occurs with the life cycle of a security, there's the primary issuance and the offering phase of it. And let's say a company is selling 10 shares, those 10 shares have to go on the blockchain. So now we have to reflect those shares on the blockchain, and now they can go trade on the exchanges. For registered offerings, we found that there's a lot more heavy lifting that has to be done. And there's a couple more pieces of infrastructure that we had to put up there. So one is, for example, the transfer agent. If the SEC's approving something for an IPO, or if they're, we have a client that's doing a 40 Act fund, which is also a registered offering, there needs to be a little bit more glue between the traditional banking systems and infrastructure. And so a transfer agent is one of those pieces that helps monitor everything, make sure things are in compliance, and make sure things are syncing up in terms of trades and at the end of the day. And then on the other side of things, we've had to integrate with traditional custodians and banks to help make things like dividend payments and things like that occur as they would traditionally. And so for us, if we're looking at the major licensing that's required to service the space, there's a few major ones. So if you're looking at the primary issuance process, you just need a broker-dealer that's structured for private placements or referrals to service that side of things. Issuers can also go direct to market. So a lot of our clients have used our product to go direct to market without a broker-dealer. And then once the asset is sort of trading, you need a custodian, and you may need a fund admin, you may need a transfer agent, which is performing the asset servicing type stuff as well. And then there's the ATS. We see one major blocker to this space sort of blooming being the lack of a SEC registered custodian. And so that's one of the things that we think once one of those is registered, it'll really allow for the space to bloom. ATSs aren't supposed to custody these assets themselves. What's your
thought on timing with regards to that SEC approved custodian?
So there were a ton of applications last year that sort of queued up. I'm really hoping that happens this year because it's such a major blocker to the space blooming, and the world is sort of waiting to see what the SEC does first. My guess is end of this year we'll see something. We're thinking it'll be not necessarily a startup, but a established institution that has the balance sheet that can get the insurance to help service the market in terms of custody. So that's what we're expecting end of this year.
So didn't Fidelity announce their custodian product?
Yeah, correct. But it's structured as a trust. What we found is that FINRA is not too, and the SEC aren't too excited about state level trusts holding security tokens, and they're waiting a little bit longer to just learn more and see what's ideal.
Cool.
Yeah. So in the normal world, trusts can hold securities, but in the security token world, we're not seeing a level of comfort there. And so we also do expect some of these registered offerings to go through. So you can take a look on Edgar. You can just search for blockchain and maybe search for the F1, S1, or other types of registration statements to see what's queued at the door for going live. And so we do think that once those go through, there will be a repeatable template that companies out there can use as well to do these direct to consumer offerings where you don't need to check for accreditation because they're SEC approved. And so if you go on Edgar, there's an F1 filing that's queued up. That's a foreign company doing an IPO in the US. There's some 40 Act funds that are queued up as well. There's one called ARCA Funds, a Theseus Debt Fund, and Franklin Templeton also has their own that they're looking to put out there. And so we think, yeah, once those are out, now people know, okay, this is how the SEC can get comfortable with us putting our assets on the blockchain. So custody, one, we're hoping is going to get through this year. Registered offerings will provide a great template for everyone out there. And one thing that we think is really key is just integrating with traditional systems as well. So we've been integrating with, like I said, traditional banks and custodians as well as traditional banking software, just so that we can help move the security token space and make it look more traditional to the industry players out there. And so that's sort of where what we're hoping will mature in 2020. We saw a lot of issuers come in the door starting July of last year. And we see entrepreneurs out there and institutions getting a little bit more comfort with putting their assets on the blockchain. Part of it is regulators are changing their tone a little bit. And now that they're a little bit more educated, they are more comfortable having conversations. And the other one is, I hate to say it, but every time the Bitcoin price goes up, there's more interest in security tokens as well. And so that's
good. Well, Mason, just last question, and that's, your talk was a good talk, thanks, but it was obviously very kind of U.S. specific. What are you seeing outside of the U.S.?
Yeah, so there's a lot of okay. So I think if we're looking at international regulators versus U.S. regulators, we do see a greater appetite internationally to be more proactive. And we're seeing this in Singapore with the sandbox structure and how they're bringing companies in and sending them to market. We're also seeing this in Switzerland with 2 fully licensed crypto banks that are fully approved with full banking licenses. And so and even when we're interfacing with these regulators ourselves, we are they are trying to solicit us to get licenses overseas so that they can also be competitive with Silicon Valley. And so regulators see an opportunity for an edge there. I think in Japan, we're seeing a lot of hands-on experiments, and I think that's great for getting regulators comfortable with the technology. I wish the U.S. experimented a little bit more like folks are doing internationally. So I think regulators internationally are a little more hands-on. They seem to grasp the technology, understand the risks, understand the benefits better. They are providing avenues for going to market. But I think the most important thing is they are waiting for the U.S. to move first before they make bigger moves internationally. And that's a good and a bad thing, because I think internationally they understand the tech a lot better, they understand the risks better. But in the U.S., we're having to do a lot of education. It's very step by step. So that's sort of the dynamic that's playing out right now.
Okay, terrific. Thanks, Mason. And now I'd like to turn it over to Tom. So Tom, there's a share button, so you can take over the screen. See that? You see the share at the in the toolbar.
Yes,
So
okay.
just hit that.
Got it. Let's see. Share with my screen. Not be able to. Okay. Let me just. It won't let me share. I have to quit and come back. That's really strange. Hey, Lou, if I could just send you this deck real quick.
Sure.
It might be easier. There we go. I could just start talking while you pick that up. Sorry about that. Deck. All right, so I just sent that across. Yeah, hi, this is Tom Lombardi with Wave Financial. We have been working in the space for some time now. It's really good to see kind of an anecdote. It's good to see everyone come together, a lot of familiar names. We have a venture fund. We're investing. We've invested in a lot of teams on this call. And likewise, we've also, we have investors on this call. So it's, I think, different from traditional crypto. There's really a lot more coordination and sort of cooperation between issuers, service providers. So that's been a really good experience. The first thing I'll tell you a bit about what we're doing, but I'm going to take a different approach on this call. I went down a rabbit hole last night, and I'm going to bring you guys with me. So let me just tell you a bit about what we're working on, and then I'll guide you through it. So yeah, we're a fund issuer or digital asset manager. So we have really 2 parts. We have our funds. Okay, there we go. We have our investment funds. We have the we have the Wave Select 20, which is an index fund. We have a really cool Bitcoin Income and Growth Fund, a bit about. And then we have our Wavemaker Genesis venture fund, looking into the future to wrap some funds around hard assets. And given where we are and sort of the appetite for those, I think time's on our side. And then the second part, we do treasury management. So that's another group that's really picking up. We see the DeFi has brought an attention to optimizing these assets, definitely with staking tokens coming, to the market, to things like Coinbase. People are really asking themselves, how do I generate yield from these assets? And then things around options, the Bitcoin options market, some 700 million traded every single day, mainly overseas, but we're seeing some of that come to the US. We're very active traders on LedgerX and exploring CME and back. Next slide, Lou. And we'll just fire through these really quick. This is our Wave Select 20. It's an index, low fee, gives you exposure to the top 20 cryptocurrencies. We have, Vertalo is a partner of ours, and this working with distributors really out of Asia has been a key part of our growth, and in a structure that's friendly to wealth managers, investment managers. Next slide. The Bitcoin Income and Growth. This has been a big part of our business right now. Essentially, we're selling covered call options on Bitcoin. It is a way to generate yield and also exit positions at strategic levels, right? So perfect for an ICO funded team that they have Bitcoin on their balance sheet for some reason. They're not a hedge fund. They should have cash on their balance sheet. But if they want to hold on to it, or if they want to, optimize it and monetize it, a covered call option plays a really good role, right? So you can generate yield, and then you can also have strategic exit points into the future. All right, so let's get into the rabbit hole. Let's go back. So one of the things I think about with digital securities, I was thinking about this last night. I knew that Dave and Mason were going to cover, the landscape and regulatory impacts. And one thing around investor relations that I think is super powerful, right? So, when I think of investor relations, I have a few friends that are in the business, and they're taking analysts out to dinner, they're talking with media. That's sort of the sexy side. The boring side is you're basically maintaining a website that's putting out filings and press releases and financial statements. You're handling inquiries from investors. It's part of the business still has that human aspect, but I think the other part is just ripe for digitization, and digital assets, in my mind, not only could be the enabler to automate it, but I think can really flourish from this automation. So next slide. If we look at some of the functions of investor relations, we have annual reports, communication. In post Sarbanes-Oxley, we saw that compliance was really a big part, but that went in-house. So that really took a lot of the responsibility away from the outsourced, winers and diners that were based on sales. So, and then the other thing is, some of the headwinds is that you don't really, these companies don't even know who their investors are. These shares are held in street name at big brokers. There's very little information about who the investors are. Next slide. Okay, next slide. Covered that. Fire through these. Okay, so I was doing some research. Top trends in investor relations. Considering passive investing. How do they get investors into sort of commoditized, boring type of assets? MiFID, one of the key roles of investor relation is to persuade sell-side analysts to have them talk about their clients. And with MiFID, that really puts a lot of constraints around what research analysts can talk about. And then, I'm a little bit jaded here, but like ESG investing, I mean, this is a very big vertical, but from I think from the lens of an investor relations professional, it's more a spin than I think it is disclosure, right? So it's like, how can they sort of use some of these very commercial outputs of companies and turn them into a storyline that investors could be into. So from my point, I think investor relations is going to be bifurcated into, back to sales, and then a large part of it will be into more of a data research. The other part of this I want to reflect on is, if we look at the traditional marketing role, the traditional marketing role, 20 years ago, you'd have 10 people thinking about creatives, thinking about taglines and these sort of things. And today, those 10 people, you may have one marketer, but you'll have 9 data scientists, and they'll be looking at their cohorts. So they'll be looking at their user base. They'll be looking at A/B testing messaging. So even that's being automated away. This is an example. This is a company that we work with, Strax, and what they're doing is they're taking investor information that's submitted by investors, and it's allowing companies to learn more about their investors. Strax is an advertising expert. So what they do is they pair, they go out into the market and buy all this data from Nielsen, Experian, and they pair that data with your investor roster so that you can message them directly. You can get information in front of them that's not so sort of lethargic or static, and be very active in your communication with these people on a more personal basis. So next slide, Lou. I think when we look back to digital assets, digital securities, right? Step one is we're tokenizing and offering memorandum. I mean, these are very complicated structures, but all rules are set, and this sort of communication is very informative. It's not persuasive. Number two, and I think this is huge, right? Last mile messaging. So if you're doing KYC, AML, both on the issuance and the secondary trading markets, you know who your investors are at any point in time. You don't need this sort of Strax gimmicky marketing experience data matching. You know who they are. And so I think what we're going to see is we're going to see a lot more direct messaging through a lot of different channels, right? I mean, you could send in a zero Ethereum transaction and put a message field with some sort of message. I know that Coinbase, down to the next step around voting, right? So like, how are these parties going to vote through? They can vote through using their wallets, much like on the Maker interface. Whether they're sending tokens or just sending sort of a representation of their ownership. Even parties like Coinbase are allowing investors to vote through their Coinbase wallets. So, and this is, I mean, these are just the things that I can conceptualize today. But if we consider in the future, right, a Turing complete smart contract can essentially, do any sort of if that then this action, right? So we think about automated, or we think about accounting systems on the blockchain, right? Automated distributions. Now we're talking more about DAO structures that I think would be excellently suited for digital securities. And, all of these things are really getting to not just this sort of, not just where are the robots bringing them in, but also this effective and efficient communication between investors and issuers, and as well as, think about the investment banks, the broker dealers. They're going to say what's in it for us, right? So kind of the last point, right? I mean, with these things, with the advent of really, I mean, let's go back to just, these utility tokens, these ICOs. ICOs essentially gave these founders godlike control over their company with no fiduciary duties over their investors. the investors have no legal recourse. You know, that changes with digital securities, right? You are a shareholder, and now you have a claim, and you can vote, and you can be active. So, you know, I just think about the future, right? Maybe this isn't 2020 or 2021, but you know, what are we going to see about activist investors, right? The famous Carl Icahn, very active with finding opportunities and finding avenues for persuasion. But let's change the sides of investor relations back to not just pushing communications top down from the issuer, but think about how are the investors empowered to talk to management and to talk to the community. You know, now we have this decentralized database where these peer-to-peer, not just transactions, but these peer-to-peer communications can happen in real time. So I'd be excited to see more things we haven't seen from ICOs are the investors' ability to persuade and move direction. I think it'd be very fascinating to see how this changes with digital security.
Yeah, I think a lot of change to come. Thanks a lot, Tom. And, you know, so far the three speakers we had are really service providers. So I'm excited to hear from Antonio DiCristo with COG Network, who actually has a security token offering in process. So Antonio, you want to take the screen?
Sure. Let me just... Okay.
It's a really nice background.
Yeah.
So
Dave,
yeah, can you see? You can see everything here.
Take a screenshot of that, Dave. Go on, Antonio.
Love it.
So as Lou said, we're coming at this from the perspective of a project. And first of all, I just want to say thanks to Lou for putting this together. I'm Antonio DiCristo. I'm the Chief Business Development Officer for COG Network. And COG Network is an STO project designed to tokenize energy assets. And we're actually very excited for our upcoming launch in the near future. So our hopes with this presentation are to give you a little bit of an idea of our experience of what we wish we knew when we first started this, and also to help anybody who wants to go down the same journey of creating a security token. So COG Network began our journey in November of 2017. Basically, there was a founder on the team who was contemplating the idea of developing a coin to represent oil assets. The majority of our team is out of Texas, so that's where the oil idea comes from. So we discussed the advantages and disadvantages of launching an ICO versus an STO. For a variety of reasons, not the least of which was the ICOs were becoming more and more suspect for scam. We chose to go the STO route. We also liked the idea that STOs were often backed in physical assets. Our STO was always intended to be based in the energy space, going back on the idea of tokenizing oil wells. And through some advice with professionals, fund professionals and such, we came up with the idea to focus our energy on, or focus our project on using energy as the premise for supporting, or supporting the energy premise with 3 to 4 strategies. One of the big areas that we were interested in was algorithmically traded commodity futures as part of the energy platform. And during the exploration into algos, we met a mathematician who we ended up working with as an advisor. He had worked on designing trading strategies using algorithms, and he's been our advisor ever since. And part of what he was doing at that time was helping us vet the algo trading strategies that we were interacting with. And through conversations with him, we actually came to the conclusion that it actually might be a better idea to design our own proprietary algo trading strategy, which we currently have, and it's been paper trading for some time now. Now with an investment strategy in our pocket, we then could focus on creating an entity. So we began the process of incorporating in the US and the Cayman Islands. We chose the Cayman Islands because we wanted there to be a regulatory framework already in place that worked with the US. Plus, it didn't hurt that a vast majority of hedge funds are incorporated there versus other locales in the world. So we filed with the SEC under Regulation D at that time, which enables us to be exempt from most of the costly SEC registration requirements, and notified operations under Rule 506B, which says we cannot use general solicitation or advertising to market the security. When we actually finish our private placement memorandum, which will be in the near future, we'll actually be switching over and file our notice to Rule 506C, which we'll be able to market after that. Additionally, COG Network will be operating under the guidelines of Rule 3C1 of the Investment Company Act of 1940, which specifies a limitation that we are permitted to 99 or less U.S. accredited investors. Finally, there isn't a notice for Regulation S, but we will be operating under this guideline, permitting us to raise capital outside of the U.S. So originally, COG Network token, or the COGNET token, was going to be presented to Asian and Indian millennials. In Asia alone, this group is projected to have 60% of the world's millennial population, and will have over 200 billion in disposable income by 2020, as reported by MasterCard in an article entitled "Why Asia Millennials Matter." However, as we were starting to go down this path, we learned that the regulations in various countries forbade us from selling securities to anyone except accredited investors. So this led us to change our target to institutions, broker-dealers, and family offices. Furthermore, we learned when contacting lawyers on jurisdiction by jurisdiction basis, there's an additional fee of anywhere from $30,000 to $100,000 US per jurisdiction to complete the legal paperwork to be able to sell the tokens. This cost, plus the fact that we received advice to launch our platform in at least 2 countries in an effort to learn what was working and what was not, gave us some pause. With regards to legal work, our first relationship was in the Cayman Islands, as I mentioned before, because we thought originally that this might be the only legal counsel that we would actually need. We chose this firm based upon our feeling that they were best suited to our needs at the time. Those needs were fluent understanding of funds, crypto, and STO architecture, plus working knowledge and a pathway for us to follow rather than them going out and figuring it out. We later determined we would also need a firm in the States, which we chose because of blockchain expertise, plus the firm in this firm that we chose came with a recommendation from the Cayman Council. The US firm that we worked with also did background checks on us personally, so to make sure that we were legit. And we're extremely pleased with both our Cayman and US attorney because they're large firms with strong management. They have provided legal guidance, assisted with building our corporate structure, provided us with an understanding of laws within all jurisdictions, assisted with process of registration, delivered trademarks and copyright advice, and the list goes on and on. To sum it up, our legal counsel has provided a wealth of information while acting as our conscience. So all told, we have a significant amount of legal representation, which anyone who's getting into the space should understand. Here's a list of just, some of the legal counsel we have. The Cayman Council, we have a US counsel, a fund attorney, copyright attorneys.
Hey, Antonio?
Yeah, go ahead.
All we're seeing is the mountains.
Seriously?
Yeah. That's all I'm seeing.
The whole time?
Yeah.
Oh, man. Let's see here.
And also, I can tell that you're not using night shift. Okay, so if I was your dad, I would tell you to turn on night shift.
I don't know what that is. Let's see here. So you can't see you didn't see any of the presentation?
No, we've just been seeing the mountains.
Oh man, you gotta be
But
kidding.
it looked really nice. So no complaints for me.
On the replay, we can put the slides in.
Okay.
I mean, we see enough slides. We love listening to you, Antonio. You're doing great.
Well, the slides were so good though. Where is it? Let's see here.
So it goes. Why don't you just keep on talking?
All right. Well, I'll just, keep going then. Let's see. Okay. So, the amount of legal counsel that we have. We have the Cayman Council. We have U.S. counsel, fund attorneys, copyright attorneys, attorneys familiar with the CFTC, international tax advisors, attorneys in each jurisdiction, local U.S. attorneys to deal with contract law, and that's about it. So the bottom line is to do this right and follow all the STO regulations. Take time. It takes time and money. There's no way around this. And then, although it may seem romantic to skirt the laws and fly without spending the time and money on legal, there are more than enough examples of companies and projects who've chosen this route and are left broke, facing significant fines and lawsuits from government and disenchanted investors. We originally thought the process of doing the diligence to find entities, establish the various relationships, having conversations with the entities in order to communicate what we wanted to say on each registration was going to take around 1 to 2 months in real time. However, given the necessary work with lawyers, the SEC, various regulatory agencies, the CFTC, and the NFA, we now estimate it should take around roughly 3 to 4 months in real time. In addition, we estimated we will spend somewhere between $250,000 to $300,000 US on legal and tax advisement to get the STO done. The lesson we learned and continue to learn is that if you want to do this right, it always will take longer and cost a little bit more money than you expected. Speaking of another cost is in the area of vendors. We worked with a variety of vendors over time, including TokenSoft, which is helping us to design our token. Prime Trust is going to be our custody agent, and MKG will do our website and social. And we have sourced several reputable clearinghouses for commodities future trading. I can't stress enough performing due diligence when selecting vendors. Much like it taking extra time to do the legal and regulatory work during the upfront work in selecting partners will save you time and headaches down the road. Remember these STOs are relatively new. There are a few people or companies who have significant experience, so we relied on our advisors and partners to introduce us to category leaders and on our own intuition to sift between the good and not so good. On the conference front, we attended multiple crypto conferences early on and met a variety of influential people. We thought, wow, this is amazing. But then we attended the Singapore FinTech Festival of 2019, which is a conference focused on new initiatives in the finance space. And we were overwhelmed with how much we learned and the people that we met there. For anyone who has dreams of launching an STO, I can't emphasize enough that FinTech conferences are the place to be. And in summation, as we mentioned in the beginning of this presentation, we have an upcoming launch, and we're looking to launch outside of the United States in Singapore. We chose Singapore as the country to launch the STO in because we feel they are a financial center that is respected throughout the world. They have proactive and regulatory guidance in place as it pertains to crypto and more specifically STOs. The fact that their primary language is English also saved us a massive amount of time and energy. And lastly, Singapore offers an in to all other Asian countries, which was one of our original targets. These are just some of the key STO-related learnings, and I could go much more into detail, but time doesn't permit. Thank you so much for listening, and I look forward to answering questions afterwards.
Okay, thanks, Antonio. As you've been going through the process, what's been the biggest surprise, I guess? Obviously it costs more, it took more time. I think those are things that are true about everything in life.
Yeah.
but is there kind of any other kind of, this is, I really didn't think that this would happen, or was surprised by it,
Yeah, a lot of surprises. The biggest surprise for me was, while talking to legal counsel in many of the jurisdictions in Asia, how little regulation they actually have there. There was a place, I think it was Vietnam, in fact, that we had a pretty well-known legal firm basically tell us that we could sell the tokens to citizens in Vietnam, whether they're accredited or non-accredited, and it would not be illegal for us to do that, and there would be no ramifications for us. However, the citizens that possibly held our tokens could be, there could be major legal ramifications for them. So obviously we decided not to do that, but that was just one of the countries. There's a few other countries like that as well. So that was kind of shocking.
Great, thanks, Antonio. So we got a few questions from the audience, and thanks to the speakers for answering some of them during the call. That's helpful. But I actually think that Mason, I'd love to hear you talk a little bit about from one of the questions that you just answered about what computer protocol you use for the smart contracts and your understanding of the interoperability of tokenized securities.
Was that for me?
Yes.
Yeah. Okay. Yeah. So the question was, what computer protocol do you use for your smart contracts? What is your understanding of interoperability of tokenized securities? There's a couple facets here. So when we started, we had an understanding that these can't be free-flowing tokens. They do have to be interacted with in the same manner that your traditional equity is interacted with. And so our first clients were mostly on Ethereum, so we designed something called ERC-1404. You can go to erc1404.org to learn more. And we also have a blog post on selecting your blockchain on our blog. Basically, whatever blockchain you're using, there's certain regulations that you have to follow, and the token has to be treated in a certain way. Like, for example, you have to authorize all the individuals that are holding the token and take them through investor onboarding prior to them being able to hold the token. You have to be able to revoke the token. If there needs to be a correction, you need to be able to freeze the token in case an investigation needs to occur by a regulated entity. And all those features are outlined on those two websites and blog posts. And so whether it's whatever public chain it is, or whether it's a private chain, we try to build a permission network. And when we built 1404, we did take input from all the exchanges out there, wallet providers, because the standard wasn't for us, it was for the ecosystem and the people out there. And we took a lot of those learnings and came up with 1404. So it's designed to be interoperable across different exchanges, wallets. Any wallet that accepts ERC20 can accept the Ethereum-based tokens. On the private chains, obviously, that's up to discretion of the issuer.
Okay, thanks for that. One of the other questions, and I think this is for everybody to comment on, is to a large degree the conversation is largely been about institutional investors. There hasn't been as much talk about the individual investors, and so just comments that anybody would have about do we think that this is an institutional product first? Obviously, I assume, and if so, is this something that we think will eventually come to individuals? Dave, I'll start with you.
Yeah, so there are benefits on both sides for institutions and investors, and they're kind of symmetrical. The benefits for institutions is smoother back office operations. Tom was talking about investor relations. One of the things that this kind of technology does is it creates a nice, clear confirmation of ownership between the issuer and the investor, much better than a proxy spreadsheet. Now, we specialize in cap tables and shareholder registries, and blockchain is fantastic for that. And so it's a better cap table, it's a better shareholder registry, it's a better investor relations experience for both the institution and the investor. So that's symmetrical. On the investor side, owning and actually having title to the asset in the form of a smart contract, having it in a wallet, whether that's a custodial keyless wallet like we recommend, or a self-sovereign wallet like a MetaMask, I believe that is a better way to own something. It gives you a clear title, like programmatic title, than having that represented on a spreadsheet in proxy format, like if you're using some kind of cap table software, which exists on the market now. So those two things, okay, a better ledger of ownership for the issuer and direct ownership by the investor enables the direct listing and trading with lower latency and lower cost on exchanges. So there are massive benefits, cost reductions, efficiencies, reduction in friction for both parties. And is it institutional? Is it individual? The answer is yes, it's both.
Okay, terrific. Any of the other speakers have comments on individual investors in security tokens?
This is Antonio. Oh, go ahead. Is that Mason?
Oh, sorry. Please go ahead.
No, Antonio, I was actually going to ask you, as you're actually doing,
going
out. How much is in?
First of all, I got to say, I would love for that to be the case. I don't foresee it happening in the short term. I think that, my explanation about Vietnam is an example of how far away some of these countries are in terms of trying to figure that out. There may be some structures in place in the future where individuals may be able to buy them through pools, pooled funds or something like this. But directly, I think we're still kind of a bit a ways from that. I do know that, I will say this, I do know that there's some vendors that we're working with that have some pretty good ideas in terms of how to make self-custody better, which I assume would help that cause as well.
Yeah, undoubtedly, Mason.
So two things there, and this sort of ties into another question I got about retail investors being able to access these things. So these registered offerings that are coming out, when they are SEC registered, they can go to retail investors. And so we have two clients that are doing this, ARCA Funds and INX. One is a U.S. Treasury-backed stablecoin. The structure is a 40 Act fund. The other is a F1 offering. And so with that structure, you can go direct to investors, and they don't need to be accredited. Although there are investor onboarding procedures for investors that seek to participate. And that's generally with these registered offerings. And then in terms of investor comfort, I run into a lot of similar issues that Dave runs into, where this infrastructure that was designed for cryptocurrencies doesn't really map well to the world of security tokens. The cybersecurity practices do and should, and the technology does, but not necessarily the user experiences. And so we launched something called TokenSoft investment accounts. So you can now hold security tokens, and it's the same experience as you would, or a similar experience to one you would have if you logged into your Schwab account or your Fidelity account. And so it just takes some time for these things to come to market. But I think these two things are going to do a lot for pushing security tokens forward.
Okay, terrific.
Hi,
Tom?
Lou, just one more point. So it's kind of correct. We will be an issuer of digital securities. Right now, we're just an issuer of crypto-backed funds. But so we're working with Vertalo to tokenize the offering. But to be honest, we're not in a terrible rush to do it. We don't see a lot of investor demand for rather than the paper offering, the digital offering. We've seen some pushback from our Asian distribution partners through broker dealers, wealth managers, and they're even asking. They're a little concerned about this sort of digital offering. They're more comfortable with the paper form. So yes, it's going to change, but today, we're still in that changing process. And then I'll follow up on what Mason was saying, is that like having that wallet that, you sort of use, you onboard once and then you use it all the time, that's super powerful. But I'm really looking forward to when more of the either broker dealers, Fidelity, TD, or even some of the fintech guys, Robinhood, Wealthfront, they've already done all the KYC. They've already done the messy onboarding stuff. And then it's just a question of, are you interested in this investment? So, I think once we get to that point where we're not, so the bottleneck isn't to get a picture of people's passport, right? The bottleneck should be a quality of offering and distribution.
Okay. Well, terrific. Thanks, guys. This is a terrific call. Thanks, everybody, for dialing in. And the call is going to end.
Thanks, Lou. Thanks, guys.
Thanks so much. Thanks for having us.
Thanks.